Welcome back to First Intuition. If you haven't met me before, my name is Anne. I am taking you through a series of lectures on the Finance Act 2024 in respect of the business tax AAT level 4 unit. So this is our revision session for task number 9, which deals with trading losses. These tasks are all taken from the First Intuition mock number 1, so you can find them in there if you've got the First Intuition materials. So I'm going to take you first actually to the reference material, because this section on trading losses has lots of information given to you. I always feel like this is like the recipe. You just have to follow instructions. So everything pretty much that we need to know to be able to answer questions about the trade losses is printed here. We just have to understand it and know how to use it. So we have the different choices or options in terms of how to use our losses here on the left. We've got sole traders and partners or unincorporated businesses in the middle there, and companies on the right. Now I'll start off by saying I always feel losses are a little bit like a gift voucher. If somebody gives you a gift voucher, there's maybe various things you can do with it. You could take it to the shop and use it that day. You could save it and think, okay, I'm going to save that until Christmas comes when I know I won't have money. I'm going to use it then. If you don't really want it, you can pass it on to somebody else and they might give you the cash for it. So there's various different choices and how you choose to use that voucher, maybe all at once on one big purchase, or you might buy several smaller things. Fits in really to me with what we're talking about here in terms of trading losses, because we do have different options or choices about what to do if we make a loss. And the first option is that we might take that loss and say, I don't want to use it yet. This is like the gift voucher that you decide to keep until Christmas. So you think, I don't actually really need it right now. It might serve me better if I saved it for a rainy day. So I'm going to put it onto one side and I'm going to take that loss and I'm going to use it in future. So we can carry it forward. Both sole traders, partners and companies have that option. The rules might be slightly different, but they can all carry forward. And interestingly enough, this is actually sort of the default. So if they don't say that they'd like to do anything else, this is the default or perhaps the automatic assumption in terms of what will happen to a loss. So other options then, they could use their loss and offset it against other income in the current year. So maybe they've got income in this year and they don't really want to pay tax in this year, so they can cash in a little bit of this gift voucher or this loss to reduce the income and then pay either no or less tax. So there's an option to use your loss against current year income. The rules specify exactly how that works. And your other option is to carry the loss back and say, actually, I want to use it against last year's income. Now, last year's already passed. I appreciate that. So I'll just go back and update last year's tax return and mention that I want to use this loss now, and then I'll redo last year's figures. So these are going to be the main sections that are going to come up within the numerical part of questions. Occasionally, we might also see these other couple of bits, so I will mention these too. If you make a loss in the opening years of trade, we call it an opening year loss. And the options for relieving this loss, what you can do with it, is just a lot more flexible. So an opening year loss is a lot more flexible, and it refers to losses that you've made in the first 4 years of trade. Now, an interesting point here is that if you are in a partnership, and the partnership's been going for many, many years, so it's not in its first 4 years, but you have just joined. When you join a partnership, it's like the partnership starts all over again. So then we would say for you, as the new partner, you are in your opening years of the partnership. So if the partnership makes losses within the first 4 years of you joining, it's called an opening year loss. Likewise, if you're a partner in a partnership and you resign from the partnership in the year that you resign, that is your final year. So that is your terminal year. So if the partnership makes a loss, you can claim terminal loss relief. Otherwise, for a sole trader, they claim terminal loss relief when they stop trading. So all the rules are there. I want to say that these are sort of like the mainstay at the beginning here, the option to carry forward or do a current year and then the carry back. These are more specific areas. So what to do with losses in the opening years of a business and what to do with losses in the closing years of a business. So I'm not going to read through all of those now. We're going to see which ones we need as we actually get to the question. So let's go there. So our example task is Sapphire Limited. So Sapphire Limited tells me it's a company and they've got results from the last 2 years of trading, December 2025 and then December 2024. Just notice what order they're given in. They're not necessarily always given in the same order. Sometimes you might have 2024 on the right, sometimes it might be on the left. So you've got to just know which year is which, I suppose. The other thing that I think can make a real big difference between doing well with these questions and not is understanding that when we make a loss, we're talking about a trade loss here. So when we make a trade loss, such as this one, there, that loss happens in December 2025, it's in that year end. That means that that year becomes known as the current year. So the current year is whatever year we made the loss. So if the loss had been made in the year to December 2023, I'd say 2023 is my current year for the purposes of loss relief. Because the rule says that you can offset the loss against profits in the current year and then you can carry back for 12 months. So I need to know when the current year is. And the current year is the year that the loss was made. It could be December 25 or 24 or 23. It really makes no difference. Current year simply refers to the year that the loss was made. We've then got a chargeable gain, or in the case of 2024, a loss. We've got some interest and we've got some donations. And Sapphire has a policy of always claiming for their loss relief as soon as possible. So they're going to avoid doing a carry forward, I'd assume then, and try to use it all in this year if they can. Maybe they can use some last year. That's what we're going to be having a look at. So as soon as possible. We've then got a series of questions to answer. I'm actually going to ignore the questions for now, because I think with this sort of question, when you get into these questions, maybe it starts to spin your brain a little bit. And I think when we learn about losses, we just put together a pro forma and we say, okay, well, this is what we'd do. We just follow the instructions in the question. What would that look like? So I actually want to approach it like that. I want to see if I was going to relieve the loss as soon as possible, what would that look like? And then I can come back and look at the questions. So that's the extract from the question. We said that that was the current year. Current year is the year that the loss was made. I've got December 25 and I've got December 2024. And it actually doesn't matter which way around I have these columns. As long as I know which year is which, I'm not really bothered. So I'm going to just copy out some of the information from the question so that I can add the losses in here. So trade profit. Well, one of the interesting things here is when I come to 2025, I see, oh, it's not a profit, it's a loss. I actually just say then the profit was nil. I didn't make a profit. And what I would do instead is put together a little loss memo. And the loss memo is a reminder of how much loss I've made and how much still needs to be allocated. So I've got a loss of 49,600. It's like a gift voucher. For 49,600, I can cash it in and reduce income or profits in order to pay less tax in a variety of ways as per the reference material. So I'm just going to pop that in the loss memo. 2024 did have profits, so I'll put those in. Then we had chargeable gains. Then I'm going to just skip to the next one, which is interest. And I'm going to leave a little bit of space because I'm going to talk about the losses. And then I've got donations. Let's not put them right there, actually. Let's move them up a line. I've got qualified donations as well, which I'll put towards the bottom. Okay, so the next line is gains. And the reference material doesn't tell me what to do with a gain or a loss. But the rule is, in relation to chargeable losses, is that I carry them forward and I offset them against future gains. So the loss that I made in December 2024 reduces the gain that I made in December 2025. So the capital loss has to be dealt with first. I'm still putting together the actual pro forma here. I'm not answering the question yet. I'm just extracting the figures from the question. So I'm just reminding myself here that I've got a gain of 5,000, but I'm not going to include all of that because I'm going to cash in my loss voucher, reduce the gain to 1,500, and then move to the next line. So the gain from 2024 is offset against the gain from 2025. Then I've got interest, so I can pop that in. There's nothing special or unusual about that. I can then add up each column, having a look at how much income I've got so far in each. 14,700 of profits plus another 1,800. So 16,500 of income there. And then 3,200 of income there. So where do the losses live then? The losses creep in before the donations. So loss relief comes here. And the question said I've got to relieve the loss as early as possible or as soon as possible. It's very important that we understand what the question is telling us to do, because we could just say, well, we'll carry it all forward. Maybe we'll be very profitable in future and that would be a good idea. But the question said, no, please don't do that. Just use the loss as soon as you can. So when's the earliest I could use the loss then? If I consult the reference material for a company, it says I can elect, which just means choose, to set the trading loss against the current accounting period profits. So I could use the current year profits. And by total profits, it means all the interest, all the gains, all the income from all these different sources. So I can set it against all my other income within my TTP that I've got in the current year. That might mean that the donations that I've made in the year are basically lost or wasted. I can't relieve the donations. We'll see that in a moment. And then it says if. And that little if there is so incredibly significant. If the above election is made, we can also then carry back the loss to set against total profits of the last 12 months. So it's what it's saying is you can only do a claim for last year if you do a claim for this year first. So I have to do current year and then I can do a carryback. That's different to a sole trader or a partnership who can actually do it in any order they want. So this is very fixed, very rigid. So the rules here are very rigid and the rules for sole traders and partnerships are very flexible. You can do a range of things. But the rules are the rules. I'm being asked to follow them. So what I'm going to say then is I could do then a loss claim, but first I'd have to relieve against the current year. And that means the year of the loss, remember. Current year is the year the loss is made. So I'd need to claim the loss there against the income here. And if I've done that, then I can do a prior year or carryback claim and use it against last year as well. So let's have a go at this then. So first things first, I'm going to do my current year and I'm going to cash in £3,200 of my loss. So still plenty left, but I have used some of it now. That will then bring my total profits. Just running out of space on the bottom here. Desperately going to try to fit it in. It will be my total profits down to 0. So the donations that were made of 1,200 don't actually have any effect. The donations are effectively wasted. because the TTP is 0. There's nothing to actually set those donations against. I can only use donations to reduce the profit if I've got a profit. Now, I hesitate to say donations are wasted. It's not like they're wasted as in the charity didn't get the money. It did. It's just that we were not able to benefit from a tax point of view. So when we made those donations in 2025, we didn't get any tax relief on them. So, having done a current year loss claim, that means I have the opportunity now to do a prior year or carry back as well. My losses are 49,600 to start with, so after the 3,200 has been allocated, let's see what's left. 46,400, so I've still got plenty of losses available. Remember, it's like a gift voucher that you can cash in. So I'm now going to take it into the previous year and say, oh, then I'd like to reduce my previous year income then. Actually, I can use 16,500 of the loss in there, so I can end up with 0 income in that year. I did make some donations in that year as well of 1,000. Charity still got the money, but they didn't get any loss relief either, so they're effectively wasted as well. So 16,500 is carried back. So then we've got 29,900 of losses left over. And that would then, remember what we said about the default? If you haven't done anything else with it, the default position is it gets carried forward. And we can only do the current year and the carry back for 1 year, which I've done. So there's nothing else I can do about this one now. I'm just going to have to put this one in a drawer, if you like, and wait and hope I make some profits in the future. So that's the loss that I've got available to carry forward. So that is how I like to put my question together. And I haven't actually looked at what the question wants yet. I know it's asking me lots of questions about how I'm using the loss, but I have focused on what I understand. I understand how to put my little pro forma together. I follow the same rules every time. I follow the instructions in the question. Everything is now clear to me. Now I can answer the questions that the exam question wanted me to answer. And I think doing it like that is more likely to get you the right answers out at the end than just trying to work it out without doing the workings. So how much trading loss relief can be claimed against income in the year December 2025? Well, that's the December 25 year. There is the loss relief, 3,200. So 3,200 is used in the current year. And how much is used in the year to December 2024? Same question, but previous year. 16,500 is used in 2024. So that becomes my answer there. And how much loss relief would be carried forward? I remember that one. You can just refer to my little loss memo, how much loss is left over effectively. It was 29,900. And then how much charitable donations, QCD, qualifying charitable donations, can be carried forward? It's a bit of a trick question because they're a use it or lose it. So if you don't use it, then it's gone. Just how it is. So if you haven't relieved your donations, which we didn't, nothing we can do about that. So nothing can be carried forward. They are just wasted. So use it or lose it. In this case, we lost it. They were wasted. And how much capital loss can be carried forward? And the answer to that is also 0 because it's already been used. The rule on capital losses is that we use them against the first available capital gain. So I carried it forward as soon as I had a capital gain and managed to use it up. So there's just nothing left. So the loss is already used up. I don't have the option just to skip a year and say, oh yeah, let's just carry it forward and see when we want it. We just use it against the first available capital gains. And in this question, they wanted us to relieve the losses as early as possible anyway, so that's what we did. So that's it. So my approach might have seemed a little bit odd to start with because I wasn't really looking at the requirements, but I feel that by drawing the table out, I'm able to calm down, I'm able to follow a process that I understand, one that I've practiced many, many times, thinking about how I would relieve my losses as soon as possible. So I work all that out, then I find out what does the question want to ask me about all that work that I've done here. Okay. Next. Ruby's a sole trader. Her business sometimes makes a trading loss. And up until now, she's claimed the relief for that as soon as possible, just like the company did. Ruby would like to know if there's anything else she should think about. Explain what other factors would influence their choice of loss relief. 3 marks. So the verb explain is important to note. So I think in order to explain this properly, and I'm just going to do some bullet points here maybe so it doesn't get too messy, but in order to explain, the first thing I might want to say is all taxpayers want to try to minimise their tax liability. So that is genuinely the thing that drives their choices. So we are going to assume that the taxpayer's main objective is to reduce the amount of tax paid. Because that is then going to set the scene for the rest of my answer. That's my assumption. They want to pay as little tax as they possibly can. So things to consider then. Explain factors that would influence their choice of loss relief. So factors to consider. As I said, this is more just a planned answer. So I'm going to say firstly, the rate of tax. Everybody would prefer to save tax at a higher rate. So if I'm a sole trader and I'm in a higher rate tax band this year, then I'd like to reduce my income in this year. If I think I'm going to be in a lower tax band next year, then I definitely want to use my tax relief this year because I'd rather save tax at a higher rate than at a lower rate. So we aim to save tax at the higher rate. So let's just say then, if we are expecting to pay higher rate tax next year, or expecting to pay higher rate tax in future, rather than using our voucher or loss right now, it would be prudent to say, could use it now, but I'd only be saving tax at a basic rate. If I keep it till next year, I'll save tax at a higher rate. So if I'm expecting to pay higher rate tax in future, I should choose to carry forward the loss into that future period. So the rate of tax that I'm paying is going to be an influence. My cash flow situation, if I offered you £100 now or £100 in 5 years from now, chances are you're going to want to take the money now. Everybody wants money now. So current year loss relief and the carryback relief are firstly more certain, because if I'm carrying forward against profits in future, then another pandemic hits, there might not be any profits in future. So you effectively then have missed your chance to carry forward. So the current year loss relief and the carryback relief are more certain, as they would either avoid a tax payment now, so avoid tax payment for the current year, because you've used your voucher instead, or maybe trigger a refund for an earlier year. this is a sole trader, so the other thing that the sole trader should consider is the use of the personal allowance. So every individual gets a personal allowance, which is an amount that they can earn without paying any tax. So every individual gets £12,570 personal allowance each year. If we use the loss relief in a year where our profit was less than the personal allowance, that's a complete waste, because the personal allowance is free earnings. So it's like using a gift voucher to pay for something that somebody's giving you anyway. It would be silly. Rather keep the voucher for something you've got to pay for and take the free stuff for what it is, free. And that's what's happening here. So we should only claim losses in years where the profit exceeds the personal allowance. There's no point using the loss relief to reduce a profit when the personal allowance covers it anyway. So if your profit's only £10,000, no point using any sort of loss to reduce that, because it's all free of tax anyway. So that applies to current year and to carry back. If we decide to carry our loss forward, then we have to just carry it forward against our first available income, so we don't have any choices about that. But in terms of current year and carry back, try not to waste your personal allowance. So that's it. Refer you again to the reference material. Very, very helpful. It is like a little rule book. So make sure that you read it. And that you're able to apply those rules in the exam question. So I hope that was useful. Probably recommend you have a go at a few more task 9s if you can find some, just to put those techniques into practice.